Would you like to learn how to save over 50% in taxes based on implementing a cash balance retirement plan? Hi, my name is John Vance. I'm president and founder of Vance Wealth. Today we're going to cover a really great topic, and that's how we save business owners taxes. I'm going to walk you through a case study that we identified for a real life prospective client who is now a client, thankfully, and go through how we helped him. And so I'm going to run through some of the facts, and this should paint the picture of how we can truly make an impact on someone's financial life. So this client is a high earner, meaning he made just shy of $1 million, but with very few employees. So he's a consultant, and he came to us because his income had just jumped over the course of the past year, and when he ran through his tax liability, he just couldn't believe how much he was going to pay in tax. So he came to us to see if there was anything that we could guide him with, and so this case study really helps us to identify the solutions that we came up with. So one of the things that happens when you're a business owner is that there's a lot of complexity around tax and tax planning, and part of the tax code today is something called qualified business income. And so the qualified business income deduction starts to phase out. So this client was really concerned because his income had jumped up, and so he was in a situation where he no longer qualified for the qualified business income deduction, but through our thoughtful planning, we were able to qualify. So what we actually did, and this was after the calendar year, so we went back and looked at a draft return and recognized that we likely could set up a cash balance plan as part of his retirement plan contribution. So as you can see with a cash balance plan, his total tax liability projected for not only federal but also state of California was north of $174,000 in tax liability. By us implementing the cash balance plan, we actually were able to lower his tax liability down to just over $104,000, which saved him just north of $70,000 in taxes. So the reality is, if we think about, well, how did we accomplish this? We recommend that he funded $125,000 of his hard-earned money into the cash balance plan, and by doing so, that saved him, again, north of $70,000. So when you do the math on there, the tax rates or the tax savings was north of 50%. I think it was actually just north of 55%. So this shows you the power of being more purposeful with tax planning. I think too often, we fall into the rut of just doing things as we've always done them and not really looking at things on an annual basis and make sure we're making the best decisions for our clients. So this is just one of the great examples of how Vance Wealth and Simplify can help make a difference on your overall tax situation. And the big bonus here is this client was also able to put $125,000 into a retirement account that will grow tax deferred, and that'll be something that he'll be able to live off of in retirement. If you like this video, please subscribe to our YouTube channel so you can get real-time updates on videos that we do in the future. Thank you very much. Have a great day.